Alright everyone, Cowboy Trades here, welcome back to the channel for another update on the S&P 500. So I've got two very interesting charts that I want to show with you today regarding insider trading, specifically corporate insiders selling at the highest level they have in the past year. Now, let's talk about it. When we do come over to the equity market, specifically the S&P 500, of course, we've been discussing this on the channel, how we've quite recently broken out of this macro downtrend in the bear market. Now, what is interesting is within the past few weeks, specifically towards the end of January, we've started to see corporate insiders selling their shares at the highest level in the past year. So let's talk about this. Now, when we do come over to our first chart, this is the insider transactions ratio chart. This basically shows us when corporate insiders are selling, securities or their stocks from their own company. Now, why we have charts like this is because corporate insiders have to disclose when they're selling, mainly because if you are a corporate insider, you'll have more information on how your company is performing. So for example, if the equity markets are assuming that you're going to have a positive earnings ratio, then they might start buying up your stock and your stock might start going to the upside. If you have corporate insider information saying, hey, our earnings aren't actually doing that well in advance of earnings season, then you might start to sell off your stock, which is why we have charts like this. Corporate insiders have to disclose this information. Now, what I want to show you over here is we have three massive spikes that have happened in the past year or so, each with higher levels. So you can see there's been a spike in corporate insiders selling their stocks towards the end of March, towards the beginning of April, really. Then you can see corporate insiders selling towards the end of August and into the beginning of September. And also quite recently, right at the end of January in the past few weeks or so, we've seen the highest level of corporate insiders selling in the past year. Now, when we do come over to the S&P 500, if you're a veteran of the channel, you might have thought this was something like the liquidity conditions chart, because we've got a chart that looks very similar to this, showing us when liquidity conditions have topped out, and this also tracks tops in the S&P 500 quite well. This is something different. What I've done is I've overlaid where the corporate insiders have started to sell at elevated levels. Once again, pointing out that the insider transactions ratio is the highest that it's been in the past year. Now, when we do look at previous times where insiders have sold, and we're going to give a theory on why insiders have been selling in just 1 second, but when we just look at what happens when these insiders start to sell, you can see insiders started to sell over here. They almost beautifully called the top in the end of March. In fact, they were only off by about 1 week. Well, they were off by 1 week. Over here, you can see if we do come back to the original chart, they started to sell in late August, and it started to spike up and up into late August, and then coming into early September, that is when the ratio topped out. And you can see, coming into late August, this is when the top was, but the spike actually happened in the beginning of September. So for this one, they didn't call the exact top, but they more or less started to sell into the exact top. They were selling, and the ratio spiked out right over here. And of course, you can see we took another massive plummet to the downside since then. And right now, more specifically, since the end of January, the insider transactions ratio basically showing us when corporate insiders are selling their stocks, their bonds, their securities, we can see that they have sold at the exact local top so far. Of course, I can't 100% say this is the absolute top in January. I personally think it is, but so far, corporate insiders have sold into the end of January, and of course, as you can see, coming into the end of January, this is where the top was in the S&P 500 so far. Now, this is all good and well, but what is one theory on why corporate insiders have been able to sell at these levels? Well, my personal theory, and this is going to be backed up partially by this chart, is that they obviously, if you're a corporate insider, you have more information than the regular retail trader on how your stock is performing. So my theory is that corporate insiders are selling, and this literally always lines up with earnings season, which is very interesting. So what I wanted to display over here is basically when earnings season happens, these corporate insiders, they may know whether for example, if retail traders think your stock is going to do very, very well into earnings season, they might buy up your stock, the price of the stock goes to the upside. And if you're a corporate insider and you know that your EPS is going to miss, EPS meaning earnings per share, so basically if the equity markets are thinking that you're going to have a positive earnings per per share, but you know, because you're a corporate insider, that it's going to underperform what the markets are expecting, then you might sell into earnings season. And this is once again another reason why these corporate insiders do have to disclose when they are selling their stocks or securities, etc. So what I wanted to show you is this chart over here. This was a chart shared by economist Gavin Baker, and if we do look at this, this basically shows us the median excess return versus the S&P 500 on the day after the earnings report. That kind of sounds like a mouthful, but this shows us when there is earnings season, when there are EPS reports, so basically when we have our earnings per share ratios, we can see the companies at the top which had an EPS beat, meaning companies that had a equity markets were expecting Apple share to do a 1% increase, and they did a 2% increase, so they beat the earnings per share that was expected from the markets. And over here we can see EPS misses, companies where for example maybe they were thinking Amazon was going to have a 1% increase and it had a 2% decrease, so this would be a EPS miss. Just an example, but you can see most of the time, in fact all of the time, this moves very rational. So for example, in the 2008 financial crisis, when you had companies that beat their earnings per share expectations, they performed well, and you can see the basis points went up, they did very, very well, and they had a good excess return. But when you come down to these companies that had an EPS miss, once again looking at the 2008 financial crisis, the companies that didn't do as well as the companies that beat their EPSs underperformed, the companies that did beat them overperformed. And you can see this time and time again. You can see companies that beat their EPS over here in 2015, 2016, outperform the ones that missed their EPS. Now, we're literally seeing something like Gavin Baker said over here, stocks have literally never outperformed before on EPS misses. So quite recently on earnings season, we've seen companies that had an EPS beat, so companies that beat their earnings per share expectations, actually broke to the downside, which is not really something that has happened before. And also, you can see companies that had an EPS miss, so companies that, missed their earnings per share expectations, actually went to the upside. And we're literally seeing a cross between these two lines, between companies that have had an EPS miss and an EPS beat, which is extremely irrational. So once again, like Gavin said, this is really not something that's happened before. They've literally, or stocks have literally never outperformed before on EPS misses. So we're seeing something very, very irrational right now in the earnings season. And because of this, this may back up the theory on why insiders are selling. For example, equity markets may be looking at companies that have had EPS misses and they're buying up these shares, they're buying them up, buying them up, buying them up. And if you're a corporate insider, you might be looking at this and saying, hey, retail traders, they're buying up our shares even though our earnings are coming to the downside. And quite recently on the channel, we didn't make a specific titled video on it, but it was in one of our equity market videos. I do remember posting this over on Twitter here. We talked about the S&P 500 P to E ratio, basically the price to earnings ratio, and it showed us that, from the last quarter and the last year, the earnings were dropping to the downside. So we know that in general, as a majority in the whole of the equity markets, earnings are actually coming to the downside, but especially for the companies that are seeing EPS misses, that have completely missed their earnings expectations, some of these stocks are rallying quite recently since the equity markets have broken above this mean trend line back down to the downside. So once again, if you are a corporate insider and you're seeing retail traders coming in and buying your stock after it's having an EPS miss, it would make sense to start selling into this most recent rally. I know that if I had a company, let's say it was Airbnb, and I was looking at poor earnings numbers and we had a huge EPS miss, or we were getting ready to have an EPS miss, of course I'm a corporate insider, I would know what our earnings are going to be before we release them to the public, so I may start selling into the most recent rally. Retail traders are buying up, my stock, which is, for example, Airbnb. And, while retail traders are buying up Airbnb, I know in advance that the earnings ratio, the price to earnings ratio is down. I know that we're going to have an EPS miss, but people are still buying into my stock. So, this might be a reason why we're seeing the insider transactions ratio have a huge spike into earnings season. And like we previously discussed, so far in the past year, these spikes have been pretty indicative that we're going to have a further move back down to the downside. Now, I tried to scour across the internet for, you know, a insider transactions ratio which tracks prior to this. However, even if you come over to the source, Thomas Reuters, it doesn't seem like you can find a image of this that tracks back for more than a year. So nonetheless, I did just find this very interesting, and I will leave the source to this down below. Of course, whenever I do find these new interesting charts, new interesting economic sources, I want to learn from these, and I also want you to have further resources that you can use to help you navigate these markets. So I will leave the link to this down below in the description. Also, I know this is an equity market video, but I thought I'd just quickly let you know that in terms of, we don't really have corporate insiders for Bitcoin, but we do have Bitcoin whales, which are also good to track. And when we do look at the Bitcoin whales, just wanted to give you a really quick update. You know, obviously in the past year or so, the past 2 years, really, they've been selling. Just wanted to let you know there's really nothing to update. They have not started to buy, and they're still sitting at these very, very de-escalated levels where they've been residing for quite some time. So, you know, Bitcoin whales are selling, and also corporate insiders are selling. Liquidity conditions are topping out, and they have been topped out for quite some time, like we've been talking about on the channel. A lot of these things are pointing towards the fact that this is a bear market rally, and that we should be heading back down to the downside for both your equity markets and your cryptocurrency markets very, very soon. So that's all I've got for you for this video, my friends. As always, if you do enjoy the content, let me know down below by leaving a like and a comment. Share the videos with your friends, and if you do want more of my post charts, memes, economic data, things like this, the P to E ratio, which won't always make it over to my YouTube channel, there's plenty of charts which, you know, are very interesting that I do share over here, but I don't have, you know, enough time, or it's not enough to talk about for an entire video. So if you want more of my content, be sure to head over to Twitter at 618_cowboy. Make sure to come and join the Discord community as well. If you head over to my YouTube, click on the About section, you can see my official links for Twitter, Discord, Instagram, and my merch store are all down below. But for today, that's all I've got, my friends. As always, it's been your boy Cowboy Trades. I'm out. Peace.